Welcome back to Investing Talk Podcast. Today, we're tackling a question that seems to be on a lot of people's minds. Is Southwest Airlines a good time to buy right now? We've gathered quite a bit of information for you, analyst reports, financials, charts, market sentiment, trying to look at this from all the angles. Our goal here is simple, give you clear insights, whether you're thinking about a short-term trade or maybe a longer-term investment hold. And hey, before we jump in, if you find this helpful, please do subscribe. Maybe give us a like or leave a comment. It really helps us out. And if you're feeling extra supportive, you could consider buying us a coffee. Also, if there's a specific company you want us to look into, just drop it in the comments. We always like hearing what you're curious about. Okay, let's get into Southwest Airlines. Starting with the basics, the fundamentals, what are the core numbers telling us about the company's health?
Right. So looking at the fundamentals, as of mid-July 2025, Southwest reported trailing 12 months revenue of about $27.58 billion. Their net income came in at $547 million, which gives an earnings per share, or EPS, of $0.88.
Okay, so they're profitable. That's good.
Yes, they are profitable. But, those figures suggest pretty thin margins. That's fairly typical for the airline industry. It's very capital intensive, but it's definitely something to keep in mind. A little wiggle room.
Thin margins, right.
Yeah.
That makes sense for airlines. What about their financial prudence, how they handle their money and their competitive edge? What makes Southwest stand out?
Well, airlines usually carry a lot of debt. That's just the nature of the business. But Southwest, historically, they've had a reputation for being more financially careful than many of their competitors. And their competitive advantage is quite strong, actually. Southwest is the biggest domestic airline in the U.S. based on passengers boarded. They run a fleet of nearly 800 Boeing 737s flying to over 117 destinations. So this huge domestic network, combined with their really strong brand recognition and that long-standing low-cost model, gives them a pretty durable advantage, especially in the U.S. market.
That network and brand power definitely sounds solid. But, okay, a healthy company is one thing. The price is another. Is the stock price reflecting that strength, or is it maybe too high? The current price is $37.70.
Exactly. That's the crucial question. How is the market valuing Southwest right now? If we look at their trailing PE ratio, price to earnings for the last 12 months, it's sitting at 42.16.
Wow, 42. That sounds pretty high for an airline, doesn't it?
It really does, yeah. The industry average PE is often more in the range of, say, 10 to 20. So 42.16 definitely suggests the stock might be trading at a significant premium, potentially overvalued.
Okay, so based on past earnings, it looks pricey. But what about looking forward? Is the forward PE any better?
The forward PE is lower, yes. It's 25.51, which is, well, more reasonable than 42, but still feels elevated compared to typical airline valuations. Their price-to-sales ratio, the PS, is 0.75. That's actually quite moderate, kind of in line with the industry average of 0.5 to 1, so that's a bit more reassuring. And they do offer a dividend. The yield is roughly 1.9% to 2.2%, which is decent for the airline sector.
So a mix there. High PE, moderate PS, decent dividend. What are the analysts saying? Do their price targets line up with this current $37.70 price?
Not really. The consensus among analysts, their average price targets fall somewhere between $31.73 and $32.07.
It's quite a bit lower than where it is now, about 15% lower.
Exactly. It suggests that most analysts expect the price to pull back from its current level. And, Morningstar, for example, they rate the stock as fairly valued, but they slap on a very high uncertainty label and give it their lowest one-star rating based on value.
1 star. Ouch.
Yeah, it implies they see it as overvalued, and they're pretty skeptical about its future growth prospects, justifying this price.
Okay, so fundamentals are solid, but valuation looks stretched and analysts seem wary. Let's switch gears a bit. What are the technical charts showing? The price action itself.
The technical picture is interesting. The stock is actually trading very close to its 52-week high right now, which is around $37.85. It's also significantly above its 50-day moving average, which is $32.29, and its 200-day moving average at $31.32.
Right, so those moving averages act like trend indicators. Being above them means...
It means there's been strong upward momentum recently, a clear uptrend on the charts.
Okay, so it's been flying high, technically speaking. But strong uptrends can sometimes mean things are getting overheated, right?
Yeah.
Any warning signs?
That's exactly the concern. While the trend is strong, the relative strength index, the RSI, is currently at 73.43.
And above 70 on the RSI usually means?
It usually suggests the stock is in overbought territory. It's run up quite fast, potentially signaling that a short-term cool down or maybe some consolidation could be coming.
Okay, overbought.
Yeah. The overall sentiment is still described as bullish, despite this short-term technical overextension. In terms of volatility, it's moderate, around 4.86%, and its beta is 1.2.
Beta of 1.2, meaning it tends to move a bit more than the overall market.
Correct. Slightly more volatile than the average stock.
Got it. So strong trend, but flashing an overbought signal. Now, shifting to the broader sentiment, how are analysts feeling about Southwest overall, and what's the general market mood?
Well, as we mentioned, the analyst consensus rating is technically a hold, and those price targets imply that downside, maybe 10 to 16%. The general sentiment seems bullish, but it's definitely tempered. You see that reflected in the fear and greed index.
Oh yeah, what's that saying?
It's currently at 39, which falls into the fear category.
Interesting. So general bullishness, but underlying fear among investors.
Yeah.
Bit contradictory.
It is. It suggests caution is definitely warranted, even if people generally like the company.
Has there been any big company-specific news lately? Insider trading, M&A buzz, anything like that?
Not really, no. No significant insider buying or selling has been reported recently, and no major M&A activity either. But there's a big event coming up very soon. Their Q2 earnings report is due on July 24th, 2025.
Ah, earnings season.
Yeah.
Okay, that's always a potential catalyst.
Absolutely. It could definitely move the stock price and introduce some volatility in the near term.
So, speaking of catalysts and volatility, let's look ahead. What are the key things that could impact Southwest, both short-term and long-term, and what are the main risks investors need to keep on their radar?
Short term, it's all about that July 24th earnings report. That's the immediate focus. How will their performance look and what's their outlook? Long term, you're looking at bigger picture stuff, like the continued recovery of the airline industry post-pandemic. That's huge. And critically, fuel prices. Fuel is a massive cost for airlines, and those prices can swing wildly. That's always a major factor.
Right, fuel prices are always the big unknown.
Definitely. Plus, you have potential regulatory changes or shifts in travel demand. Maybe an economic slowdown affects leisure or business travel. Those could hit performance hard.
And the risks specifically tied to the stock or sector.
Well, stock specific, we've talked about that high PE ratio. That's a valuation risk. And the company is just inherently sensitive to fuel price swings. Sector-wise, you've got risks like fluctuations in overall air travel demand, and the competition is always intense, both from other low-cost carriers and the legacy airlines. And then macro risks, inflation, recession fears, geopolitical events, all of those can impact travel and the broader market. That moderate beta means it will likely swing with the market too.
Okay, that's a lot to consider. So after digging into the fundamentals, valuation, technical, sentiment, and risks, what's the overall verdict? Where do we land on Southwest Airlines?
Taking everything together, our overall assessment gives Southwest a rating of 5.5 out of 10.
5.5 out of 10, so kind of right in the middle. Why?
Well, fundamentally, it's a solid airline. Strong market position, good brand. But the current valuation just looks stretched, especially that PE. Plus, the technicals are flashing that short-term overbought signal, and analyst targets point towards potential downside from here. So, good company, maybe not a great price right now.
Okay, fair enough. So if someone is interested in investing, what approach makes sense? Is there a better price to aim for?
Based on the analysis, a better entry price range seems to be around $30 to $32. That area is closer to its key moving averages, the 50-day and 200-day, and it aligns better with where analysts see fair value. It just seems like a more attractive risk-reward setup.
And the strategy? Short-term trader versus long-term investor.
For short-term traders, I'd say extreme caution is needed right now. That overbought RSI plus the upcoming earnings report means high potential volatility. It could swing sharply either way. For long-term investors, if you believe in the company's strengths, maybe consider starting to build a position if the price dips towards that $32 level or below. But even then, given the valuation concerns and macro risks, patience is key. And using stop losses to manage risk would be wise.
That makes sense. And for active traders who might jump in, any thoughts on managing the trade, like setting stop losses or take profit targets?
Sure. For a trader getting in, a stop loss perhaps around $29.50 might make sense. That's just below some recent support levels and near that 50-day moving average. As for taking profits, an initial target could be up near the recent highs, maybe $37 to $38, that resistance zone. But honestly, that earnings report is the big wild card. You'd really need to reassess based on the market's reaction after July 24th.
Right. So wrapping it all up, Southwest Airlines looks like a fundamentally strong player in the U.S. airline market, great brand, big network.
Yeah.
But currently, the stock price seems high compared to its earnings and what analysts expect. It looks perhaps better suited for patient long-term investors waiting for a pullback rather than short-term traders chasing the current momentum.
I think that's a fair summary. The key takeaway really isn't just about Southwest. It's about that relationship between a good company and a good investment price. They aren't always the same thing. This case really highlights how your time horizon short-term versus long-term demands different strategies, especially when you have potentially market-moving events like earnings just around the corner. Patience versus timing.
Absolutely. So what stands out to you from this discussion? Are you leaning more towards a long-term view, waiting for that better price? Or does the short-term action intrigue you despite the risks? It's something to think about for your own approach. That's our look at Southwest Airlines for today. Until next time, keep learning and keep asking the big questions.